those lucky steel buyers. They've been watching prices go down for about 6 months. And some analysts think prices haven't hit the bottom yet. I'm Paul Tague, editor of Purchasing Magazine.
And I'm Tom Stunza, executive editor. And this is the February 23rd edition of Purchasing's Monday Midday Business Report. Here are the stories we're following for you this week.
Steel prices head to January 2008 levels.
Hot roll sheet steel is cheaper than in January of 07.
Metal service center shipments drop.
Industrial production as a whole dropped in January.
Diesel falls and gasoline rises.
SRAM prices fall.
And the microprocessor market grows. Barely.
First, you're invited to a special free webcast this Wednesday, February 25th at 2 p.m. Eastern on how mid-sized companies make the investments that enable them to drive procurement savings and performance improvements. We'll present the results of an in-depth study conducted by Purchasing and Ariba, and we'll hear thoughts on calculating ROI from Winn-Dixie's Brett Mauser. But first, the news.
Steel buyers should be one happy group, and it's easy to see why. A market basket of 8 different steel products shows that prices, which peaked in August, are heading to the level they were at in January 2008.
On average, prices for those 8 products are 36% lower than the August peak, and they're only 4.6% above the January 2008 level.
In fact, buyers tell PurchasingData.com that they paid $509 per ton for hot-rolled sheet steel last month, which makes that product cheaper now than it was in January 2007 by 0.8%. The January price was 52% lower than its July peak and 12% lower than January 2008. We estimate the price will slip further in coming weeks, but rise slightly at mid-year and stabilize at an average of about $526 by the end of 2009.
But there is one little problem. Despite the low prices, steel buyers still aren't buying.
Shipments from U.S. and Canadian steel distributors are down 42% from a year ago January, according to figures from the Metal Service Center Institute. Monthly service center shipments have been less than 4.5 million tons since August. Despite the drop in shipments, service centers have reduced their inventories by slowing down their purchases from steel mills.
The lack of buying activity is reflected in the latest figures from the Federal Reserve. It reported last week that industrial production in January fell 1.8%. Production in the manufacturing sector dropped 2.5% in January. Since August, materials output has dropped 9.4%, while manufacturing output has dropped 10.4%.
Metals prices aren't the only prices falling. Earlier this month, we told you that diesel prices were falling, and now, according to the U.S. Energy Information Administration, they've averaged $2.19 a gallon last week, more than $1.20 lower than a year ago. Meanwhile, retail gasoline prices rose 4 cents last week to $1.96 per gallon on average. Still, that compares with $3.08 a gallon a year ago. Now, some analysts are saying that it won't be long before diesel prices could drop below gasoline prices.
And electronics component buyers can expect SRAM prices to fall on average about 7% a year through 2013. That's according to researcher IC Insights. The average price will drop from about $1.69 in 2008 to $1.13 in 2013. Demand for SRAM is declining as more and more SRAM functionality is being embedded on other chips, such as microcontrollers. In addition, OEMs are trying to use fewer types of memory to reduce component count.
Finally, at least one market grew last year. The global PC microprocessor market grew, but only 0.9%. Researcher IDC says PC microprocessor revenue went from $30,053 billion in 2007 to $30.8 billion in 2008. Unit shipments increased 10%. Well, that's it for this week's edition of Purchasing's Monday Midday Business Report.
You can get more detail on all these topics and much more at purchasing.com.
And see purchasing.com for daily updates of commodities news you need to do your job. Also, check purchasingdata.com for price, lead times, and other critical market intelligence.
And don't forget that free webcast this Wednesday, February 25th at 2 p.m. Eastern on investments that drive savings and performance improvements.
I'm Paul Tague.
And I'm Tom Stunza.
See you next week.